Just a few years ago, China's housing market was booming with high prices and lots of construction. But things have changed, and now there are too much supply, debt, and government restrictions. This collapse has left ghost towns all over the country, with buildings being torn down or left unfinished. Sadly, many Chinese residents are now living in temporary shelters because the homes they bought were never built, and they've been waiting for years. So today, let's explore why the crisis has happened, how it affected the economy, and what's in store for the housing market, which appears to be in trouble. Hey friends, welcome to Capitalista. Before we dive in, please take a moment to hit the like and subscribe buttons down below. Let's begin by understanding the concept of a housing crash. It's when property prices sharply decline after reaching a peak or bubble. This can happen gradually or quickly. In fact, housing bubbles occur when people take out larger mortgages than they can afford due to predatory lending or changes in their finances. And when prices drop, homeowners are forced to sell, adding more houses to the market. From 2005 to 2009, China witnessed an extreme rise in house prices in both residential and commercial real estate. This was a result of various factors such as low interest rates, easily available credit for construction and property purchases, cultural norms promoting home ownership, and limited opportunities for Chinese investors to invest in foreign assets. In Beijing and Shenzhen, the cost of homes increased by 140% in just 5 years. Furthermore, investment in residential property as a percentage of China's GDP tripled from 2% in 2000 to 6% in 2011, the same level that led to the housing market crash in the US in 2007. In August 2021, things worsened for the Chinese real estate market. Evergrande, China's second largest property developer, told the Guangdong provincial government about its financial troubles. Evergrande was struggling with over 300 billion in debt and could not pay its bills. The company has since undergone a restructuring process. One of the reasons for this crisis is that Chinese developers have traditionally relied heavily on pre-selling homes to generate a steady cash flow, particularly apartments in large buildings and modern urban communities. This allowed them to continue construction and purchase more land. However, economists have noted that this practice was similar to a Ponzi scheme, where funds obtained from new investors were used to settle existing clients. As a result, the collapse of the Chinese property market was inevitable. According to George Magnus from the China Center at the University of Oxford, the Chinese market resembles Bernie Madoff's scam during the global financial crisis. Developers get large sums of money from customers to finance upcoming construction projects. This cycle continues until it grows to its present size. Magnus clarifies that it's not a classic Ponzi scheme but still uses clients' funds to support the next project. China decided to clamp down on this reckless lending, which deprived developers of their financing. When the housing market collapsed, it was discovered that developers used the funds from incomplete homes to buy more lands or projects, leaving them unable to finish the homes already sold. China is currently experiencing a downturn in its real estate market. The Chinese government has been accused of deliberately causing this collapse by many. The reason for this is that many middle-class households could not afford homes in several cities. The housing industry accounts for 20% to 30% of China's GDP and has driven the country's impressive growth. However, many developers are on the brink of bankruptcy and defaulting on their debts due to various reasons such as lockdown measures, lack of confidence, and stringent government regulations. In 2022, the industry experienced its worst year, with sales figures at only 60% of what was achieved in 2021. Construction across the country stood at a standstill, and buyers were left in a difficult situation. Many Chinese residents had made agreements with developers to exchange their land for a new high-rise homes. But after almost 8 years, they are still waiting for their new homes, having moved out of their old properties long ago. This situation is very concerning for the Chinese economy as a whole. A group of Chinese villagers agreed to trade their land for new homes and high-rise buildings, but after 8 years, they still have nowhere permanent to live. Zhengzhou City is a clear example of the crisis. With unfinished buildings scattered throughout, the elderly and vulnerable have been provided temporary shelter, while others are forced to rent elsewhere. A single mother who lost her job and was widowed says they have no idea how much longer they must wait. The developer has no money to build. Outside the city, remnants of people's shattered lives are evident, with major highway construction stopped midway and rubble left uncleared. Amidst incomplete and hazardous dwellings, some individuals had already started paying mortgages, while others resorted to moving into unfinished blocks as they had nowhere else to go. Frustrated with the situation, many chose to withhold their payments and took to the streets to express their grievances. crisis. The government provided a stimulus package and relaxed restrictions to address the issue to encourage stalled developments to restart. Despite some construction resuming, there are concerns that not all projects have continued. Some speculate that developers only deploy a limited number of workers to create an illusion of progress. Maintaining a prosperous housing market is crucial for China, as many households consider their homes their most valuable assets. According to a 2019 People's Bank of China survey, housing accounted for 59% of total assets, while mortgage loans made up 12%. These figures are comparable to the United States in 2008, just before the subprime mortgage crisis, and Japan in the 1980s, before the real estate bubble burst. Some experts estimate that the real estate industry and associated activities accounted for 29% of China's GDP, similar to the economic output of Ireland and Spain before the global financial crisis. The Chinese government wants to stabilize the property market, so they have made changes like lowering mortgage interest rates, relaxing down payment requirements, and easing purchase restrictions. Some banks offer unconventional mortgages that let people pay until they turn 95. Banks in cities like Nanning, Hangzhou, Ningbo, and Beijing have raised the age limit on mortgages to between 80 and 95 years old. This type of mortgage is called a relay loan, and the borrower's children must continue the mortgage, but the elderly borrower cannot repay it. The borrower's age plus the mortgage length cannot exceed 70 years, but the new terms have relaxed this limit. However, borrowers must meet certain conditions, like having their mortgages guaranteed by their children and making sure their combined monthly income is at least twice the monthly mortgage payment. Banks adapt to China's aging population to keep the housing market alive, but Hong Hao, chief economist at Grow Investment Group, said it's a drastic measure and suggested it could be a marketing trick to get older people to pay for the younger generation's mortgages. China's real estate crisis is still ongoing, despite recent policy measures. The International Monetary Fund's Thomas Habling says more action is needed. Chinese officials claim that the property market is operating smoothly, but shares of companies like Evergrande and Shimao have been suspended since March 2022. Country Garden, China's largest property developer, reported a 96% drop in profit in H1 2022. Over 30 Chinese property firms have defaulted on international debt payments. President Xi Jinping faces a significant challenge as the housing market poses a significant obstacle for China's Communist Party. Stimulus measures have only provided short-term relief. The fundamental issue is a substantial housing bubble and a market prone to boom and bust cycles, which have become systemic. And the sad thing is that the Chinese people bear the brunt of it. So what do you think of China's housing crisis? Do you see one happening in the US in the future? Let us know your thoughts in the comment section down below. And that's it for today's video. Make sure you show your appreciation by giving a thumbs up, subscribing to the channel, and turning on notifications. This way you'll always be in the loop and never miss out on any of our uploads. Until next time, and take care.